all securities, so we're getting to the end of the month, all securities that take time to settlement, everything that trades Monday and Tuesday this week is going to settle in September, and the third quarter, everything that trades on Wednesday forward is going to settle in October and the fourth quarter. So let's see if there's a big change in behavior from Monday and Tuesday to what happens on Wednesday, Thursday. Okay, so here is the week we just traded, this set of candles right here. Last Friday, and on last weekend's video, we talked about how we had a new monthly all-time high settlement for OPEX. We sold off after that down to the 50-day simple moving average and closed below it. But at the same time, we also looked back at all the other Friday closes and, frankly, all the daily closes below the 50-day simple moving average had been huge buying opportunities all year long. And I thought that this would be another one, but unfortunately, no. We wound up doubling down our whole range of the sell-off by starting with a gap down open on Monday, because our new September halfway back here at 44.25, look, that was just below the low that we had set on Friday of last week, and that was our new September low and low for the sell-off so far. But we gapped down open on Monday and doubled down, a little more than doubled down the range of everything that we had sold off. Well, now this was a news-driven event. This wasn't about us closing below the 50-day simple moving average last Friday. This was about a developer out of China, Evergrande, that was in danger of defaulting. They had an interest payment that was due this week, and there was rumors that it wasn't going to be able to make its payment. So everybody smelled shades of Lehman Brothers in the 2008 crash. They thought there would be a systemic risk to the whole financial system, worldwide banking system. So we got this gap down open and go. And maybe we really got it all out of our system, because this entire sell-off literally doubled down in a single day. The low, a new September low was made. It was a breakdown below the halfway back for July. It was a look below the 5% mark off of this new all-time high we had just made. And it was a hold, a look above and reverse above the June close. The June close was the halfway mark for the whole year, the second quarter close. And here we are, making the low for the final month of the third quarter. It held just above the June close. So maybe this is a significant enough point that this really will be our low, at least for the month of September. We've only got a few more days to trade that, and like I said, everything that trades through Tuesday is going to settle in September. Anyway, so it's really almost like we've only got 2 days left to trade for the month. So maybe, I'm pretty sure this is probably a good low here, and that's going to hold from here on out. The main agenda is going to be, when we come in this week, is going to be whether we're going to finally make it through this 20-day simple moving average, which, as you can see, was curling over and falling. But thanks to this 3-day rally that we just had this week, it's flattening out. 44.72.73 on the close. You got to look at this on a daily chart and get a read off of the open. That's going to be your point. There's like a 10-point spread between S&P and ES. So overnight tonight on ES, if you see it trading above like 44.63, you know that we're trading above that 20-day simple moving average on the S&P 500. And pre-market tomorrow, if we're trading above that 44.63 level in ES, that means we're going to gap up open over this thing and finally make it out of the hole that we've been in. I've shown you in video after video that this 20-day simple moving average, when we get into a big sell-off like this is the point for the breakout. You either short this if we fail, or you buy this with two fists if we take it out. I think if we take this out early in the week, they're looking to take us all the way back towards the all-time high to end the month of September. So let's take a look at the monthly chart and see why we'd be doing that. Okay, this is a monthly time frame. We know we just set the low for the month this week that we just traded, and look what it did. It got us into a bearish engulfing state when we got down to the low for the week. And here we are rallying back, more than halfway back on the month. And if we were to try and turn this candle green to make yet another in this set of green candles here that we've seen over the course of the year, the only red candle, monthly candle we've had all year was the one in January. We'd have to get above the open for the month, and that was at 45.28.80. So maybe we're looking to try and get back there and turn this candle green, or maybe we're going to just look below it and fail and maybe pull back and leave this candle red for the month, so it sort of like cleanses the palette and resets us so that we can have a rally in the fourth quarter. But that's something to think about, is this monthly time frame as to where we might top out this week for the end of the month and the end of the quarter. All right, let's take a look at the simplified daily chart. Remember that these blue boxes, this represents me drawing a box around the biggest sell-off that we had all year, which was back in from mid-February to early March. And as of Thursday, we've already sort of moved outside the time span that sell-off took. So we're in the longest running sort of sell-off that we've had all year. Actually, if we just measure it down to here, we did it within the time frame. But now we're moving sort of out of that time frame. And so maybe, as far as time is concerned, we've done the job that we needed to do to make a monthly low. If we were to come back and if we were to come in tomorrow and fail the 20-day simple moving average, if we were to just move up a little bit and fail the 20-day, first thing I would do is take that high, add it to this low, divided by 2, and figure out where the halfway back point is for this move, this bounce that we've made, and look for us to retrace and try to hold that, and then buy some calls there for a rally that's going to take us into the first trading day of the new month and the new quarter. So those are your two things to look out for. We're either going to bust through this 20-day and keep on going and maybe turn the monthly candle green, or we're going to fail the 20-day once again and maybe retrace back to the halfway back point between whatever high we've made. Assuming that we make a higher high than we did on Thursday. Maybe we won't. Maybe we've already got our range that we can measure for. But whatever that high is, back to this low, the halfway back point would be what I would be shooting for us to pull back to hold and then get long again. So you have a short trade that you can make on a fail of the 20-day, but over the 20-day simple moving average, you're throwing away money trying to buy puts. At that point, you should be long, or if you don't want to be long, then just step aside and let it play out and see if maybe we make a lower high against this all-time high that we've made and come falling back. Remember, we still have an unresolved all-time high on ES that was set in the month of September. And if this 10-point spread is still going on, that's going to take us all the way to 45.59 on the S&P 500 to resolve that intraday. Here was Friday's trading. We gapped down open on Friday, set our initial balance low, a look below the 10-day simple moving average right in the first 5 minutes of the day. We set our initial balance high within the first half hour or so, and then finally broke out of the initial balance range at the end of the day, only to come back and close 2 cents underneath the initial balance high. So if you just take the initial balance range, again, the initial balance is the first hour of the trading day. If you just mark off where that high and that low is, it can often give you great levels to judge a breakout or judge where maybe the close is going to be gravitating back towards. And sure enough, it did. Our close was 44.55.48 versus the initial balance high at 44.55.50. Okay, final thing, two more final things. Here is the VIX futures. We looked at this in last weekend's video. Here was where we were last weekend. I thought that we were going to get that weekly close below the 50-day and then rally on Monday, but no, we got that news, and instead we sold off and doubled our range, and here was this move on the VIX going all the way up to 26.75, a higher high over anything that we saw in July or August. So that could be a good signal that we do have a good strong low in for the time being. And you can see how the VIX completely sold off the rest of the week. And finally, let's take a look at the options here. We want to be using the October 1st. That's this Friday's expiration coming up. If over on the put side, there's some nice volume standing here at the 4400s. If we make that move out of the gate on Monday and fail against the 20-day, look at these, look and see if they're holding the $11 window and if the volume is standing out. That's your play. At the most, only go down to like maybe 43.90. You might think it's a lot of money to pay $1,100 for an option, but you're only buying 1 or 2 of them, and they are going to at least double, if not triple, because we don't mess around with the S&P 500 and make $1 here and $1 there. We look to double or triple when we get into the options for the S&P. That's the reason why we use the S&P rather than SPY to trade options. Over on the call side, I was calling these 4500s out all day. And as you can see, they held the $8 window on Friday as we went into the close. So these are what I would be looking at, especially if we have kind of a flat is only slightly up open on Monday. These are still going to be the $8 window. If we gap down open at any point, I would be looking for these to see if they hold the $5 window then, as we pull back towards that halfway back point between whatever high that we have under our belts for this bounce. That's either going to be Thursday's high, or if we make a higher high on Monday, back to last Monday's low, the halfway back point. I would be watching for these to hold the $5 window. If these don't hold the $5 window, then you go in a lower strike, such as 44.90. But I really don't think you should be in anything higher than 4,500, at the most 45.05. That's my opinion. Okay, have a great rest of your weekend. I hope this video helped you out. As always, good luck and good trading.